There is a huge myth about crypto in the UK that's costing ordinary people thousands in taxes. So in this video, we're going to bust this myth, and I'll give you the 9 ways to legally pay less tax on your crypto based on my 15 years in finance. And with HMRC rule changes coming in 2026, you've got to be prepared. But before we get into all that, I think we should really go through how taxes actually work on crypto here in the UK. So if you are a crypto investor, you have 2 possible taxes that you could end up paying. The first one is capital gains tax, which frankly is the more likely one. And the second is income tax. It's a little bit more complicated, so we'll come on to it later. So capital gains tax will apply to most people who invest in crypto, but importantly, it is only due when you actually sell it. This is a really important distinction that I think we should discuss, and that's because when you sell your crypto, you're actually realizing that on-paper gain. And the basic calculations will look a little something like this. You pay capital gains tax on the profit that you make when you sell. So if you buy £5,000 worth of Bitcoin and a year later sell it all for £9,000, then you pay tax on your £4,000 gain. But there's a lot to unpack here, so let's get into it. The second tax you could be liable for is income tax. Now, we should also say that this one is a lot less common and will only really apply if you receive crypto as income through your work or if you're making an income through mining. So the first way to pay less tax on your crypto, don't forget your allowances. So every year you can make a capital gain of up to £3,000 that is completely tax-free. Until recently, this used to be about £12,600, but has gradually been reduced over the last few years. But what does this mean for your crypto? For most taxpayers in the UK, what this means you can deduct this £3,000 allowance from any gains you make on crypto every year. But do beware, this £3,000 limit applies across all your assets. So if you've used your gain up on something else, like a painting or something, I don't know, then you can't also use this allowance on your crypto. Let's just go through a quick example. Let's say John has an income of £80,000 a year. He realizes a crypto gain of £2,000 on his Ethereum, for example. If he has no other capital gains for the year, then he will pay no tax when he sells. But we should also point out that your tax-free threshold drops if your total income goes over £100,000. If your income goes over £125,140, you will not receive any tax-free allowance. Now, this is very linked to our next point, which is split your disposals. So the £3,000 allowance that we just mentioned is a per-person limit. So here in the UK, gifting crypto to your spouse or civil partner is considered completely tax-free. Now, the good news for you is that this means that if your partner hasn't taken full advantage of their tax allowance for the year, you can gift your crypto to them to help minimize the tax liability when you sell. So that means between you and your partner, you'll get a total allowance of £6,000 per year between the two of you. But sticking with this theme, you can also stagger your disposals. So one of the easiest things to do is to not sell all of your crypto at the same time, but instead to sell bits and pieces of it over time. This means not only can you take full advantage of your £3,000 allowance every single year, and again, combining with your partner means you can double up on it. Another important thing which we should definitely point out is that your capital gains allowance works a lot like your ISA allowance, that it resets every single year, so if you don't use it, then you lose it. But also, you can't go back and reuse any unused allowances from previous years in the same way you can with something like a pension. Harvest crypto losses. Now, clearly, when investing, losing money isn't necessarily the goal, but selling your crypto at a loss does come with some tax benefits. Cryptocurrency losses can be used to offset gains from other crypto, stocks, and other assets. This is a tactic known as tax loss harvesting. And again, as we mentioned, you can use this across different asset classes in the same year. Here's an example. If you have, say, a £30,000 gain for the year, but you sell your Solana for a £5,000 loss, then that means your total gain for the year is only £25. So you basically just net the two numbers off against each other. But the same rules apply to using losses to offset gain. That means it's important to remember that you need to realize your loss to claim it on your return. Examples of realizing your loss include selling your crypto, trading it for another crypto, or using it to make a purchase. Basically, what I'm trying to say is that your loss on paper isn't sufficient. Again, you have to have realized that loss. Next, claim all your costs. So when you do actually dispose of your crypto and you sell it, make sure you claim all the relevant costs. You can do this to reduce your gain as much as you possibly can. Now, HMRC says that you can deduct certain costs from your crypto gain. These will generally be either transaction fees or valuation costs and some other costs which you can apply to reduce your gain. So do keep these in mind when trading crypto, and importantly, do keep a record of them. This will basically be so that when you submit to HMRC, you have some backup to go along with your numbers. Make a crypto donation. Now, you can decide to be very charitable, and in this case, literally be very charitable. You can donate some of your crypto to a registered charity without receiving anything in return is considered tax deductible. So what this means is you can write off the value of your crypto at the time of the donation. But it's not entirely straightforward, so let's just clarify. If the value of your crypto has increased since you originally received it, you will recognize a capital gain. So again, let's just say you buy Bitcoin for £10,000, the price of Bitcoin increases to £14,000, and then you donate it to charity. You can claim the deduction of £14,000, but you also have to recognize the £4,000 capital gain. Hold your cryptocurrency. Listen, as we've mentioned, the easiest way not to pay any tax on your crypto is to just keep holding it. If you view it as a long-term investment, then the easiest way to avoid taxes on your crypto is to simply hold on to it for the long term. And that's because, don't forget, there's no taxable event for holding crypto or transferring it between different wallets that you own using an ISA. So you can now hold crypto in your stocks and shares ISA. We did a whole video on it just here. Link will also be at the end. Now consider this fair warning. There's a lot going on here and it is very complicated, obviously, because these things always are. Link will also be at the end, but I really recommend you start with that video. Seek professional guidance. Listen, let's be totally honest. This is not the sort of thing that you want to get wrong. Capital gains tax is not as straightforward as income tax because the rate of capital gains tax you pay depends on things like your marginal income tax band, and even the size of your allowance will depend on how much you make. So consulting a professional will always be the best thing to do, because only someone who knows you and all your circumstances and all your goals can give you the best possible advice. The biggest myth. So right at the start of the video, I said I wanted to bust a big crypto myth, and it is this. People assume that because there are no crypto-specific rules written by HMRC that they don't need to worry about tax, but that is totally 100% wrong. And the reason is simple. Crypto is an asset, and we have a tax in place for when you sell assets for a profit, and it's called capital gains tax. We've discussed it extensively in this video, so don't get caught out by this one. So if you are sitting on a large unrealized gain, then make sure you seek professional advice about what you should be doing. HMRC can go back for up to 20 years, and with new regulations coming in January 2026, they will have more information, more data, and more visibility than ever. And comment down below if you want me to do a video on the crypto changes that are coming in January 2026. We have 3 videos on screen. We have how to pay less inheritance tax, why £120,000 a year is the worst salary in the UK, and the video I mentioned earlier about keeping crypto in your ISA. If you like this video, please like and subscribe. Thanks very much for watching.